Hey everybody, Chris Johnson with Money Morning. We're less than 2 days away from Nvidia's earnings report, and the stock is priced for perfection. That's not a good thing. I was trying to make it sound good, but no, it puts it at a little bit of a risk for a sell the news situation that could open up a great buy the dip opportunity for you. I've got all the charts, the seasonality, and what the options market is doing on Nvidia ahead of its earnings call. It all equals an opportunity for you. Stick with me, 15 minutes. I'll teach you something new and you'll be a better investor for it. Let's jump into it. All right, let's jump into it real quickly because we've got less than 2 days before Nvidia drops their earnings results on the market Wednesday afternoon. And the stock is, as I've already said, priced for perfection. A side note very quickly, I'm bullish on Nvidia, see a 225 to 250 print on the stock over the next 6 to 12 months. That's if we don't run into a lot of headwinds like you're going to see in September. Wait until you see the seasonality chart in just a minute. But that's if the market doesn't run into one of these full-blown corrections, which Nvidia could be a trigger for if we see disappointing and big disappointing news. But set that aside, we're still bullish on the long-term basis. But priced for perfection is a problem today, just a day before the earnings results hit. Why? Well, it's a simple term, and you hear it a lot. Maybe you hear it on CNBC. I've used it before, but let me just explain it. It comes down to that idea of buying the rumor and selling the news. When something is priced for perfection, though, that's when the sentiment, the optimistic sentiment, gets extremely optimistic. So investors on their own are raising the bar. Nvidia's already told us months ago what they expected, but investors are coming out and saying, no, we're expecting more from Nvidia. We expect them to really blow out these earnings results and raise. They call it a beat and raise. You hear about whisper numbers. The whisper number has been creeping up on Nvidia, but more importantly, the actual numbers in terms of where the stock has gone over the last 2 weeks and what the options market is doing and the analyst community is all giving you a sign that this stock is right now priced for perfection. Let's look at a couple of notes here. And obviously, the other side of price for perfection is a little bit of a pullback, and I'm looking for an opportunity to buy the dip. Again, before everybody starts beating me up in the comments, I'm not bearish on Nvidia, except to look at it as possibly getting a buying opportunity. The technicals are very strong on Nvidia right now, which you'll see. I'd just love to buy it at a cheaper price than what it sits at today. And this buy the rumor situation looks like it could afford me that opportunity. So what is it? What are we seeing? So there's a strong buy the rumor, a bunch of buy the rumor activity on the stock. And what I mean by that is we've seen investors here over the last 2 weeks bid this stock higher, really over the last 6-7 days. It's up 8%, and that's much more than the averages that we've seen over the last year and a half or so. So it's telling me, and you'll see that chart in a second too, it's telling me that everybody's getting juiced up and ready to go on Nvidia, but they could be getting the cart in front of the horse. Analysts have gotten in and they've started a front run. Over the last month, we've seen 5 analysts come out and raise their target prices on Nvidia. You don't usually see that type of activity ahead of earnings. They want to wait until they see the proof in the pudding and that the earnings are coming through and revenue growth is starting to return to its abnormally high pace in Nvidia's case. But no, we had Wall Street try to front run it now. So you've had a bunch of analysts that have come out and said, we think the stock is going to do better. And then the thing that I love watching most closely is the options market, because this is where the true speculation happens. And if you haven't heard me say it before, speculation is what drives prices higher and lower. In this case, we're seeing wild optimism in terms of what the options market is trading, and I'll break that down. All of this turns into the stock being priced for perfection. And the good news is, like I said, I'm always looking for a buy the dip opportunity. I've got 3 prices for you to write down and put on your computer screen in a second. And I'm also looking at the seasonality that's going to be coming into play here in September. That chart is very interesting as well. Let's kind of take a look at what Nvidia normally does. And this is for the last 5 years, the earnings results and how the stock has performed afterwards. And it's important to point out this little hitch right here. That's where the consensus numbers have kind of leveled out. Remember a few years ago when you saw Nvidia coming out and just saying, we can't even keep up with demand, and they were coming out with new chips and they couldn't keep up with that demand. That is that explosive growth that you saw right there takes you from 2022 into 2023 and 24. We have returned down to a little bit of a normalization. You can look at where Nvidia was before that, a normalization of those earnings per share expectations and the consensus. So it's not so much of a blowout expectation in terms of what people expect, but even though the expectation could be low in terms of earnings per share, you're still seeing investors bid this stock higher. On average, I always like to look at this, and you can write this down as well. 57% of the time, the stock is trading higher 2 weeks after earnings. And at any time, it's 4% on average higher. When it is lower, it's down by 7%. And when it's higher, it's up by 12%. Those are the two numbers I always look at. That is your risk and your reward. Your risk being 7% to the downside, your reward on average being 12% up. It's a loose way to look at it, but it gives you a quick way to judge which way, how much harm you could, let's say, expose yourself to if the stock were to trade down. Those are averages. Obviously, we've seen much larger numbers, 20% to the downside back in August of 2022, but a fairly positive bias here on Nvidia as we run in. But there's a catch here. And the one thing that has been impressive about Nvidia has been that revenue and the way that they've continued to grow that revenue. But it's slowing. Last quarter, we saw around 62%. The quarter before that, about 90%. And you could see we're coming down, down, down. Explosive growth, and this is year-over-year growth on the revenue. Explosive growth as we saw that AI adoption taking place, and now that revenue, that year-over-year growth is starting to come down. Right now, the expectations are for around 53% year-over-year growth. Last quarter was 62%, so it would be incrementally lower again. Anything below that, and the market's going to get rocked a little bit in terms of Nvidia because they are falling back. Keep in mind that you've had a lot of issues right now with the Chinese market and the tariffs and everything that's gone into place, and that hasn't necessarily been priced into that expectations of 53%. So this is one of those areas that I look at and say, it leads to the earnings per share, but that revenue number, which we'll see in that first release of NVIDIA's report after the close on Wednesday, is going to be very telling on where investors are going to react. I'm expecting this to be a challenge number. And again, returning to the whole idea here, if this number is going to be challenging for investors, they're already expecting something much better. So that brings us a little more concerned. And how do you tell that they're expecting more? Well, it's easy to look at in terms of a numbers basis. We're going to look at the buy the rumor activity. We've already talked about the analyst activity. And then I'm going to take you through the options, the open interest, and the volume right now, so you can see where that market is right now settling on its outlook for NVIDIA's earnings. Before I go into this chart real quickly, make sure that you sign up for the report down below, the Speculative 7. It's the 7 companies that we look at, nuclear AI companies. You've got the eVTOL companies and quantum computing companies that, in our opinion, are going to replace. That's right. I said replace the Magnificent 7 at some point here. So get that report down below. It's free. Anyhow, going back to that buy the rumor, what we've seen over the last, let's call it year or so, is a leveling out, an averaging where you're coming back to a point where investors really aren't stepping on the gas ahead of earnings. These are 2-week returns ahead of those earnings. The last 3 quarters notably flat or even negative. This quarter, in the last week, the stock is trading up 8, almost 9%. And we'll look at the technical chart in a second. But that is telling you that investors are trying to get into this stock ahead of that earning. Call it FOMO trade if you like, to bring up that term. But there is a fear of missing out on a great number. This is a great sign. Well, it's not great because you don't like to see a buy the rumor, but this is a very effective way to gauge whether or not we're seeing investors pile into the stock ahead of the earnings report. Next thing I always look at, and this is a lot of people love these charts that I put up. This is the open interest configuration for September expiration. When I say that, it's a third Friday in September. Somebody always asks which expiration is it. It's a third Friday. These are always a monthlies because that's where all the action happens. So when I look at this is the most bullish configuration that I've seen on NVIDIA ahead of an earnings announcement in more than a year. Let me say it again. The options market is right now positioned more bullishly than it has been in the last year ahead of Nvidia's earnings. They are clearly broadcasting their expectations are for the stock to go up towards a $200 print very quickly here. This is the open interest configuration. You can see that right around 180 is where you start to see outstanding call open interest. The green lines, the reds are puts. You do have a little bit of a hedge right there, let's call it at the 170, and then all the way up to that $200 price tag. The strike prices is where you see the calls really start to drop off. So right now, there's a range here between that 170 and that 200 where the options market has been adding exposure, bullish exposure. They want the price to go up, and especially up above that $200 level. A lot of people will say, hey, these are people writing covered calls. Nvidia is not a great, especially ahead of earnings, candidate for writing covered calls, simply because the volatility puts you at risk of being closed out of that position very quickly. Now, if you're trading a position like that, sure, maybe you'd love to be called away, and then you could buy the stock back when it does make that dip. That is not the general position that you'll see, especially with such a small amount out of the money on these particular options. So the most bullish open interest configuration that I've seen on the stock in a year. What are they doing today? Because open interest doesn't, it sticks around every day. It doesn't go to zero like volume. Volume resets at zero every day, and this is the volume activity that we're seeing today on the 26th of August, the day before earnings come due for Nvidia. And you'll see once again that same range, $180 all the way up in this case to $210 is where we're seeing a lot of that options activity, that bullish activity. So once again, a sign that the option investors continue to add those calls between that 180, 200 to 210 area, which does cause some mechanical resistance once we get up and push against those. But right now I'm using this more for the sentiment read and the fact that the market is priced for perfection, or at least the expectations are. When we start to look at the puts, this is interesting. You've got what I would call a little bit of a, and this is volume. So these are trades that are going off today. Somebody's out there either selling those puts, which would make sense. It goes right along with one of my prices here that I'll show you on the buy the dip. Somebody may be selling those 140 puts that expire in September with the idea that they could walk away buying the stock by having the stock come down to that 140 level, getting a sign on them, which is a fairly attractive option, no pun intended, for me, or at least a strategy here. But the point, our buy the rumor is very strong even in the options market. So I mentioned seasonality a couple of times. Seasonality, and a lot of people will say, hey, CJ, does seasonality on my Palantir video that I did last week, does seasonality really come into play for a stock, or is it just the market? And it's both, especially when you're talking about Nvidia. Nvidia is the market in some cases, you should be able to say, right? If you look at it, it is one of those most widely held stocks, ETFs, individual ownership, 401ks, etc. There is redemption risk associated with a company like Nvidia. Apple has been one of those companies historically that had huge redemption risk. So you could say where the market goes, Nvidia is going to go, but it's more of a case of where Nvidia goes, the market's going to follow, because it is that marquee stock, that one stock that everybody's talking about, everybody owns, or everybody wants to own. And when you look at what happens here in September, 63% of the time the stock is positive, which is right around that average, but your returns are down at 0.3% for the month of September. What that tells you is that you've got more volatility, more movement, because the month is still a winner overall. Typically, it'll be a little bit stronger, so it can eke out a win at the end of the month. But those returns being so low gives you a hint that there is volatility. Seasonality is in line, especially with some of the headlines that we're seeing, to kind of give the market a little bit of a check here. Not a body check, but just a little bit of a hip check. A healthy correction is what we call it. And in that case, Nvidia would be exposed to additional selling pressure. The stock itself, normally that's one of its lowest month, if not the lowest month of returns out of the year. So it tells you that this is some bit of the expectations that seasonality, yes, will play a part in this. So weaker seasonality for the month of September. The stock is priced for perfection. We've got the options market is looking for a $200 price or even higher on the stock, and analysts doing the same. All the while, we've seen Nvidia that has kind of over the last 2-3 quarters backed off of those huge raises that we're used to seeing, which give the stock that extra pop. So what happens here? Here's the chart that I'm going to be watching very closely, as should you. This is the chart today, and you can see that big rally that I've referred to. There's your 9% move ahead of earnings. Nice little move down to the $170 level, almost touched that 50-day moving average. Let's go through the good right now. That 50-day moving average is in a bullish trend. That means there's a 2 out of 3 chance that the stock is going to close higher every day. The 200-day moving average also in a nice bullish trend as well. So from an intermediate perspective, let's look at the next 3 to 6 months, it's got a nice tailwind that is going to help the stock. Even with that seasonality in September, you'll typically see in October and in November that are strong for Nvidia. And then you start turning into that November earnings cycle again, where investors are going to get ramped up about it. But for now, very bullish on the technicals here. There are 3 buy the dip prices that I believe this price for perfection situation could pull the stock down to. Let me reiterate. It pulls back simply because everybody has already bought the shares with those high expectations. Sell the rumor is what you're looking for here. Not a bearish outlook on the stock, but a sell the rumor rally that could combine with some seasonality to become a little weaker. So what are the 3 levels I look at? Well, the first one right now, let's say Nvidia comes out and absolutely blows their earnings out of the water, and they raise and say everything is great. We're opening up new markets, and we've got some new innovation products coming down. The robots are now within sight. We've seen headlines over the last couple days. That $170 and the 50-day moving average turns into my first buy the dip. If I'm a trader, that's where I'm looking to buy it on a move back up to 190 or so over the next couple of weeks, even with some seasonal weakness, because remember, again, they've given us a great report by this point. Let's say that report is mixed. They beat on earnings. Revenue is right around that 53%, and the outlook is just what it is. They don't raise. They don't do a huge raise, which would be extreme, but you could see it. In that situation, I look for a little more of a pullback. The seasonality winds will blow harder against Nvidia and take us down to around a 150. How do you get to that number? Muscle memory of a stock is what you always think of. If you don't have a trend line that's in the way to hold it, the 50 or the 200 day, then you start to look at where you've seen past resistance or support. And we saw a lot of resistance November, December last year, right at that $150 mark. The market does not forget those type of levels. So that's where that $150 comes in. And then $10 lower is where your 200-day moving average sits. And that's the point where, as I normally say, I start to back up the truck and buy Nvidia for the long term. How do I buy it? Well, I buy the shares if I like at that 140, 150, or the 170 level. The way I choose to also enhance or leverage these moves is I use long-term calls. I use calls that expire in January of 2027, and soon we'll see they are already trading out beyond January of 2027. You're going to see those 2028 start to sneak in. Allows you to take a long-term view, get away from the noise and the volatility that you see with Nvidia, and also play a little bit of a leverage game. You can restrict what you're going to lose, et cetera, et cetera. One of these videos, we're going to go specifically into exactly how you use these long-term calls. So that is it. About a 15-minute preview on what I expect from Nvidia here. I do see the stock as being priced for perfection, which always puts any stock, not just Nvidia, any stock at risk for a sell the news pullback, and it would be a healthy correction, kind of like what we've seen with Palantir here lately, that would give you an opportunity to buy that dip at 170, which would be very shallow, $150, which would be a very attractive dip to buy into. And worst case, I look at 140. And at that point, if we're hitting 140, you're going to be worried about a lot of other stocks in your portfolio, many of which we'll talk about right here. Remember, use the QR code or use the link down below to sign up for our free Speculative 7 report. It's those quantum computing, nuclear AI, and eVTOL companies that are very much in that discovery phase and providing great growth opportunities as a result. My name is Chris Johnson. I wish you the best trading success, and we'll see you next time. Have a great day, folks.